So the discussion where we left off is going to start with something called lower of cost or market. You know, the inventory is the price of the inventory that you have could decrease, the market price of it could decrease while you have this, and if it decreases, then the generally accepted accounting principles, which are the methods used in the US, wants you to mark down the inventory and report the lower of the cost or the market. Meaning, if you purchase the inventory for 100 and the market price is now 200, you still have to continue to have it at 100, which is the lower. But if you purchase the inventory for 100 and the market price went down to 50, then you have to show it at 50. You have to mark it down. The international financial reporting standards would allow you to adjust it back when the inventory prices increases again, but US GAAP would not. US GAAP is not going to allow you even when the prices go up. So this is the regulation. You know, whether you like the rule or not, usually the financial regulations are unfavorable. They are against the organization or the company, and this is for conservative reporting. The idea is to be conservative, is to err on the cautious side. You don't want to overstate your assets and your income, and you don't want to understate your liabilities and expenses. So let's take a look at an illustration here. So this is the cost and this is the market, right? So you have the cost is at 60,000, the market is 55,000. So you have to report the inventory at 55,000, which is the lower of the two. Lower of cost or market. So if the cost is lower, you have to report it at the cost. If the market price is lower, you have to report it at the market price. So your cost is 60,000, market price is 50,000. That means you should report the inventory on the balance sheet at 55. If it is 45 is your cost and 52,000 is the market price, you have to report it at 45. If 48,000 is the cost and 45 is the market, you have to report it at 45, right? Very simple. It's 15,000 cost, 14,000 market, reported at 14,000. So this is going to be your total inventory. Clear? Very simple, yes?
So is there something in the balance sheet to cover this difference?
There is adjustment. This is unrealized loss. This is unrealized loss, right? Where does it go again? What is the other side and what happens to the entire picture? It will come later. We have to take one piece at a time, okay? So this, again, is called conservatism, right? You show the lower of cost or market. Now, we have an illustration here of a perpetual inventory system. We have the beginning inventory and purchases and the sale and the cost of goods available for sale. So you see the same numbers here, right? The same numbers here that we have seen, and we're going to see the calculation which we already have seen one time, but just to put all of this together one more time side by side. And the Blackboard slide is not going to work, so I'm going to go back to the regular slide. Here, as you see, and you have calculated this already one time, so we have the beginning inventory and the purchases at different unit prices, right? If we are using first in, first out, we calculated the cost of goods sold to be 6,200, if you remember. We did this calculation already, right? And this is how the breakdown is. One more time, bringing this illustration back to you. The ending inventory is 5,200 and the cost of goods sold is 6,200. We went through this calculation already one time. You did this calculation with using your calculator. If we do the last in first out, same exact information, right? We would have different cost of goods sold and different ending inventory, right? Because of the way we calculate them. If we do average cost, exact same information of purchases and inventory, but it will cause a different result, right? It will cause a different result in the cost of goods sold and inventory. The numbers are a little bit different here, but the idea is the same. The concept is the same, okay? Now, the common issues, the inventory errors, the inventory is misreported for a few reasons. The first one is failure to count or price inventory correctly. So if you do not count the inventory that you have correctly, or if your accounting records show wrong prices for the inventory that you purchased. When we say price, right, it is the purchase price that you paid for. So if it's wrong, then your inventory records will be wrong. Or not properly recognizing the transfer of legal title to the goods in transit. So the legal title or the ownership transfers, as we explained, depending on who's paying for the shipment. So if it is paid for the buyer, if the shipment is paid for the buyer, the ownership changes as soon as it gets on the truck. If the shipment is paid by the seller, then the ownership transfers when it reaches the seller. You have to record the sale at the right time for your inventory records to be accurate. And this miscounting or misrecording will cause an error both on the income statement and the balance sheet, because the inventory, any inventory and cost of goods sold both are inaccurate if one of them is inaccurate. 12,000 cost of goods available for sale in each case. The example that we looked at, it was 12,000 in each case, right? But the ending inventory and cost of goods sold changed based on the method, right? Because the ending inventory and cost of goods sold together must be equal to 12,000. So if one of them is wrong, if the ending inventory calculation is wrong, the cost of goods sold will be wrong. Are you following? That means the ending inventory is reported in which financial statement? Yeah, balance sheet. The cost of goods sold is reported in which financial income statement? That means both statements are going to be inaccurate. Are you following? All right. So now I'm going to present a slide to you. It's a little bit, it requires a little bit processing in your head to understand. You know this formula: beginning inventory plus purchases minus ending inventory equals cost of goods sold. Everybody knows this, yes? Beginning plus purchase minus ending equals cost of goods sold. If beginning inventory is understated, right? If the beginning inventory is less than what it is supposed to be, then the cost of goods sold will be understated and the net income will be overstated. Is that clear? Are you sure?
Yes, makes sense.
Is mine clear? If I were to ask you to explain how, could you do it? Let's put some numbers on here. We have beginning inventory plus purchases, right? Cost of purchase minus ending inventory equals cost of goods sold, right? Sales minus cost of goods sold equals net income, right? So let's say the beginning inventory is 1,000. Purchases are 2,000. Ending inventory is 1,500. How much is the cost of goods sold? 1,500. Let's say I sell it for 5,000. How much is the cost of goods sold? I sell it for 5,000. Cost of goods sold is 100. How much is my net income? These numbers make sense to you? Numbers make sense to you? I have 1,000 in beginning inventory. It's $1,000. Purchases of 2,000 minus ending inventory 1,500. Cost of goods sold 1,500. Sales price 5,000. Cost of goods sold 1,500. Net income 3,500. This is the accurate number. Now, what does it say? The first one. It says beginning inventory is understated. So this is the first. It is supposed to be 1,000, right? It is supposed to be 1,000, right? So the beginning inventory is by mistake shown 800. And what we have in the cost of goods sold? This is remaining the same. What will be the cost of goods sold? Do the math. 2,800 minus 1,500. 1,300, right? So it is understated. Supposed to be 1,500 and it's 1,300, right? Which means if situation number one, this remains the same. I put 1,300 here. This will be 3,800. Net income overstated. You follow? Situation number one. You see that? If beginning inventory is overstated, situation number two. If it is 1,200, right? This is the accurate one. So if there is a mistake and it's 1,200, what happens to cost of goods sold? This will be, do the math. What is cost of goods sold? If my beginning inventory is overstated, my mistake, instead of 800, 1,700. Then what happens to my net income? In scenario 2, it will be understated, right? It will be understated. Clear? Is Fatima, you following? So, Muhammad, you following? Yes, sir. Say that again. No, there are other numbers, right? There are other numbers. If they remain unchanged, you follow? They remain unchanged, the net income, ultimately the net income will be affected. You follow? The sales price cost of goods sold is there are other numbers in there, but they don't change. They remain exactly the same, right? So your net income will change. Beginning, ending inventory overstated. So now we have the third situation. This remains the same 1,000, 2,000. Ending inventory is understated. So instead of 1500, we have 1300. What happens to cost of goods sold? 1700, right? That means, same in the third situation, income will be understated, right? And the fourth situation, we have ending inventory overstated, so this remains the same 1000 plus 2000, and we have minus 1700. That means cost of goods sold, what happens to cost of goods sold? 1300, which means, again, like the first situation, income is overstated. Is that clear? Right? There are other numbers we are only dealing with because the other numbers don't change. It will directly go down to the net income. Okay? Okay. Now, if you have an error in 1 year in the income statement and balance sheet where it's overstated, and in the next year, right, you have the error on the other side, same amount understated, right? So in between the 2 years, the net effect will be 0. So if you overstate in 1 year 3000 and you understate in the next year 3000, ultimately, right, in between those 2 years, the problem will be fixed. You follow? So to illustrate that, let's take a look at this example right here. In the first year, you see the correct inventory and income items are on this side, and the error you see here is in that one item, which is 1200 ending inventory. Ending inventory is understated. Are you following? The ending inventory is understated. Net income also is understated. It's supposed to be 25,000 and it's 22,000. Same scenario we had here. Inventory understated, net income is understated, right? The next year, you have the same amount, right? But in the opposite direction. So you have 3,000 a beginning inventory understated. Do you see that? Beginning inventory is understated by 12,000. What happens to net income? If beginning inventory is understated, net income is overstated for the same amount. So they're supposed to have a $10,000 income, but because of the error in the beginning inventory, their net income is 30,000. So in between these 2 years, had understated 3,000 net income in 1 year and overstated 3,000 net income in the other year. If no other errors are made, this error will be fixed if the net ending inventory calculation is correct in the next year. Follow. Ending inventory is the beginning inventory of the following year. So an error in the ending inventory is an error in the beginning inventory of the next year. If the next year's ending inventory is calculated correctly, this problem, error, in 1 year will automatically be fixed in the following year. That's why taking the ending inventory accurately every year ensures a net accuracy. Even if you have made an error in the previous year, counting the net ending inventory correctly will fix the problem. Okay? And in the balance sheet, similarly, right? If your ending inventory is overstated, it is a given your assets will be overstated. If ending inventory is understated, assets will be understated because ending inventory is in the which part of the balance sheet? Which part of the balance sheet? Part of the assets, current assets, right? So overstating inventory overstates the assets, no effect on liability, right? No effects on liability, but it overstates stockholders' equity. That is correct. That is correct. You follow? How does it overstate the equity? Because overstating of ending inventory, right, overstates the net income. Overstating of ending inventory overstates the net income, which adds to the retained earnings. Excellent, very good, right? Understatement of ending inventory understates the net income, which means it will ultimately understate the retained earnings, which is in the stockholders' equity. Is that clear? Okay. All right. So this is the end of chapter 6. Okay. Practice questions, inshallah, will be available. Do you have any questions from the previous chapters that we studied that were not included in the first exam? Any questions from the practice questions, or any problems that you're unable to, or you haven't bothered with them yet? Okay, inshallah. No problem. We have time. I wanted to, we have in the first class, we had an introduction from all the students, and I also introduced myself, but there were 2 students missing. One was Miss Fatima and the other student is still missing, Mr. Adil. So I wanted to complete the introduction. We know something about each one of the other classmates here. So could you tell us what you studied and your work experience and anything else you would like to share with us?
I graduated from Nectar University. My major was science and library.
When was this?
I graduated in
2006. Okay, and from the engineering school, or where was your degree from? Which college? Oh, okay. So the degree is in information science. Okay. Qatar National Library, okay. Very nice place.
As my major.
MashaAllah. So you have worked all along in Qatar National Library? You couldn't have, because it did not exist.
Before I worked in civil
Okay, MashaAllah, very good. And then inshallah, when Mr. Adil comes back, we will learn where he studied and where he worked, etc. I have posted the project. Okay, I posted the project in Blackboard, and it's 1 page. Let me just briefly discuss it in 5 minutes, and then you can look at it and ask me more questions on it when you get to it, inshallah. So we are divided into two groups. In one group we have Ms. Safia, Ms. Mariam, Ms. Fatima, and Ms. Ala, I think, right? And the other group we have Mr. Adil, Ms. Mai, Ms. Sausan, Ms. Shaista, and Mr. Muhammad. So what we are going to do, inshallah, is the purpose of this project is to deepen the understanding of financial statement analysis. The students will be divided into groups of 4 or 5. So we have 2 groups. In one we have 4, and the other group we have 5. Each group should analyze the financial statements provided in Blackboard, which I have posted. You have seen, I'm sure, right? This is a real company, so the name is marked out. The name of the company is marked out. This is not a publicly listed company. This is a private company. So this information is confidential for the firm where I got it from to give with the name, so they can anonymously give. So you don't know which company it is, where it's located, nothing like that. You just know the numbers, but this is a real company, and the financial statements are real numbers from real operations. Each group should analyze the financial statements provided in Blackboard using the following methods: the horizontal, the vertical, and the ratio analysis, right? And you have the information, and the information is unlimited. Whatever you want to know, anything you want to know, it's available. You can learn about anything as much as you like, right? As much as you like. The horizontal analysis and the vertical analysis and ratio, I just introduced them to you, okay? And you can learn as much as you want to, right? Each group should perform the analysis using Excel or any other spreadsheet program. So do the analysis, right, the horizontal, vertical, or the ratio calculations, and keep the ratio calculations limited to the ratios we have discussed in this class, in the three categories: solvency, liquidity, and profitability. We calculated altogether, I think, 7 or 8 ratios. There are others, right? But I want you to focus on them so that you can deepen, you follow, deepen the understanding, what they mean, how does it work for this company, instead of doing too many things and at a surface level. I like the knowledge to be about a few things, but you have a solid, deeper understanding, okay? The final report is due on November 23rd, so which is more than a month and a half from now, right? And should include the executive summary of the findings from the analysis including summarized tables from the detailed analysis. So I don't want this to be pages and pages and pages. What do you see when you do the horizontal analysis? And you can write the horizontal analysis, the highlights of what you find, the company situation, compared to the industry averages and all of those. How do you see this company to be, right? Comment on where do you see, if you see that it is at par with the industry, just say that. If you see the company is better or worse, and what do you feel about the company in each one of these cases, the horizontal, the vertical, and in the ratio analysis. You have 2 years, 2019 and 2020, month of July and year to date in both cases. So you have 4 columns, right? You have 4 columns. If you look at the financial statements, you have this is the balance sheet. You have in the income statement, you have 4 columns, right? You see, you have the month of 2020, 2019. So this is, they call it period ending, because these are for every 4 weeks, not months, okay? So period ending 7/12, 7/12 is July 12th, right? July 12th. July 12th was a Sunday, okay? Because the period always ends on a Sunday. The period always ends on a Sunday. Are you following? For this company. So you have the period ending July 12th, which is for 2020, and this same period last year ended on July 14th. So these are the individual periods, 4-week periods, 4 weeks in each period, and that's the year to date. Year to date, right, is from the beginning of the year until the end of this period, right? Until the end of this period. From the beginning of the year until the end of the period. So you have the 2020 and you have the 2019. Now, Mr. D. Boykin is going to go over his financial statements with you next class. Who's a partner in the firm that is a business consultant to this business. This is a restaurant business, and Deboarding was my boss. He's the partner at that firm. He's going to go over his financial statements. He's doing certain things with you. Okay, and you can ask him questions. Okay, so that's why I'm doing right now. So if you have look at it, see if you don't understand something, there's any issue that you're not completely understanding, or you have questions you can ask. So you can look at these are real financial statements, and you see we have been doing cost of goods sold as one number, right? We have been doing cost of goods sold as one number, right? And we have been doing sales as one number, right? So as you see, the sales in this first category is all this is sales. This is a pizza store. So you have delivery revenue, you have over-the-counter revenue. You follow? Right? And you see the percentage of the sales, how much of that comes from delivery. You see in this first column, 69% comes from the delivery. 33% comes from over the counter. And then you have sales that are non-taxable, sales, the delivery fee, right? And then you have refunds, and you have bad orders. And then you have the taxes. So these are the numbers in parentheses. The bad orders and the taxes are expenses. So this is sales tax. They have sales tax. Value tax, we call it here the same as sales tax in the US. Bad orders are those where the customer did not pay. Okay? The customer did not pay, and it happens, right? So again, I'm not going to go over the financial statements in details right now. You have the cost of labor. Study the financial statements. This is a detailed financial statement, and this is useful for managing the business. So if you own this business, just having one line for sales or just having one line for cost of goods sold does not help you in managing the business. For example, the cost of goods sold, right? And cost of goods sold, cost of food sales, they call it, same thing. You see beginning inventory, purchases food, purchases local, purchases beverage, all of these details, purchases and ending inventory. This cost of goods sold calculation, the entirety of it is shown on the income statement. Although we study that the beginning inventory, ending inventory, all of those comes in the balance sheet. But to calculate this number, the cost of goods sold, the cost of food sales, it is shown in the income statement so that you can look at it in one place, you can manage the business. Cost of labor. If you go to a textbook, you will find salaries expense or salaries and wages one line. But to manage a business, you need to know how much are the drivers getting paid, how much are the people inside the store getting paid, how much are the management of the restaurant getting paid, how much are you paying overtime in each one of these categories. Are you following? Right? So if you have contract labor are people that come and do something in your store and you pay them one time. Maybe somebody came and fixed the light, or somebody came and fixed the bathroom, right? This is contract labor. So look at this, look at the financial. This is going to give you a very thorough understanding of. Say that again. These are expenses. So bad orders, they are already included in the sales up there, right? They were delivered to the customers, you follow? But they just did not pay for those orders. You follow? So you have to subtract that from the sales as bad orders. You follow? Does it make sense? Right? Similarly, you collect the taxes from the customers. The sales tax is paid for by the customer. So if you sell a pizza for $10, the customer gives you $11. $1 sales tax. That $1 sales tax you have to pay back to the government. So that is subtracted in the end. Right? It's subtracted from the sales. This is called the contra revenue. The period always ends on Sunday, and if you go back, there are 13 periods in a year for this company. So they do 13 periods in a year. Every 4 weeks is one period. Right? So from the beginning of the year, every 4 weeks is one period. Right? So if we go back here, if we go back to 2020 calendar, if you go back, right? So the first period for 2020 is going to start on what day? The first period of 2020. The first period of 2020 is going to start on either that or 29th of December. You follow? 29th of December, if the last period of 2019 ended on 29th of December, the first period of 2020 is going to start 30th. Next day. What will happen to the days in between? You follow? So if the last period of 2019 ended on 29th December, so how many weeks did I say in every week? Every period? 4, right? So let's see, we can do the calculation. If the first period starts on the 30th, it will end on 1, 2, 3, 4. It will end on 26, right? It will end on 26. The next period starts on 27. So we have one period. One. Second period, 27, third. On the 16th, it will end, right? A second period. Third period starts 17th, right? So 1, 2, 3, 4. There's 3 periods, right? Fourth period starts on the 16th. So we have 1, 2, 3, and 4. So that's 4 periods, right? Fifth period starts here. 1, 2, 3, 4, right? So that's 5 periods. Sixth period starts 1, 2, 3, 4. That's the 7th, right? Then the next period 1, 2, 3, 4, and the next period 1, 2, 3, 4. What is the date? What is the date? What is the date? 12th of? What is the date? See? You follow? So that means the year started when? December 30th. You follow? Right? Okay. Anyhow, let's go back. So the financial statements are available, and we will have a live presentation from Mr. Boykin next week, inshallah, and you can ask questions, and then we'll prepare this analysis, executive summary. It could be if you are able to summarize your findings in one page for each one of them with some numbers and tables summarized, right? Not pages and pages of report. Summarized on what you see, right? In horizontal, in vertical, and in ratio analysis, what do you see? How solvent is the company? How liquid is the company? How profitable is the company? And you can compare the 2 years and so forth. And this report should be ready by November 23rd. On the 24th of November, which is our last day of class, we will have a contest, right, between the two teams. And the contest, the details of the contest will be announced at the beginning of the class. Okay, so there's going to be a contest between the two teams based on your knowledge of the financial statements of this company, based on your understanding, right? And I'm going to see which team outperforms the other team. Okay, you follow? It will be fun, inshallah. The grades are going to be assigned as follows. We have 15 points for the entire project, 5 points for the analysis, the report that you submit, right? 5 points for the team engagement. So I'm going to see which team outperforms the other team for the entire team. And then I'm going to see which individuals I'm going to be listening to you. You will be in the contest, talking and negotiating and so forth. And I'm going to tell you what about. And I'm going to stand by and I'm going to see which team does more, does better, is more knowledgeable, is able to do better. And then among the team members also I'm going to see which individuals, right? So if you sit and say, I agree with Mariam. I think Mariam is correct. That means you get the team point, but individually you're not making any contributions. You follow? So I need to see whether you're able to knowledgeably participate, right? You're able to knowledgeably participate. Okay? And it's not a presentation. So you will sit face to face, right? I'll have one team sit over there, another team here, face to face, and there will be a number of meetings. Huh? Not a group discussion. Not like a debate even. I cannot tell you anything more than that, but I will tell you the structure. There will be 6 meetings, 3 meetings among the group members, and I'm going to listen to both groups, how they discuss the problem. I'm going to present to you something that you have to do. And then the teams will meet, 2 teams will meet 3 times, and there will be discussion and counter discussion. So you have a group meeting within your group members. You discuss what you're going to do in the next meeting with the other group. The 2 group meets and you negotiate, and then again you go and you discuss, come back, go and come back. 6 meetings, 3 times with each other and 3 times by yourself. Okay, what about, I'm going to tell you what you're supposed to do is have as much knowledge as possible about the company's financial situation with using these tools and any other tool that you can gather. If you have 100 questions for me, ask me 100 questions, right? If you have 100 questions for Mr. Boykin, ask him 100 questions. If you want to send him an email asking him questions following, I will try to arrange that for you as well. Okay? Are you following? It will be just too much fun. Huh? Yes, it will be. Trust me, inshallah. Okay. Tell me. Tell me. Mr. Boykin advises hundreds of these businesses. Do you think he knows the industry average? He would be out of business if he did not know. How can you find out the industry average? Ah, very good. Genius. You can ask, he will tell you all of that, right? He will tell you the industry average. Plus, so that's the finance, what you calculate the industry average for are public companies. Those information are available. This is private company. Information for this type of company, it's not available unless you are in the industry, right? So I told you every month when I was working for there, when I entered the firm back in 99 May, right? We have quite a few minutes left. Mr. Muhammad, you can put down your jacket, shirt, whatever it is. Yeah, relax. Yes, very good. Now, when I joined the firm, the first day I walked in, I had 7 people report to me, and I had 189 or 90 companies, small business restaurants that I was responsible for. You looked at the financial statement, I looked at something like that with a bachelor's degree, and I had already passed 3 out of 4 parts of the CPA exam. I looked at that thing, and I was just so scared. I had never seen something like that before, because when you go to the textbook, they don't have financial statements like that. You follow, right? Financial statements that are also available on the websites of the companies, they are polished. They don't have any information. Cost of goods sold, one line gives you nothing. You see, there are 10 lines in cost of goods sold. There are 10 lines in sales. There are 10 lines in labor cost, right? This is how you can manage a business if you can see the details. So when I looked at that, and when there were 7 people, I said, that were reporting to me, I'm supposed to be supervising them and understanding their work and reviewing their work and so forth. I had no idea what they were doing, right? They would come and ask me questions. I would just act smart. I had no idea. I ran down to my boss, Deep Boykin, and I said, you know, I don't understand what they're asking me. I have no clue. So he laughed and he said, they will teach, don't worry. So in 6 months to 1 year, now I was supervising them because I had the theoretical knowledge, you follow. So, but I struggled. In the first 2 months, I thought about quitting many times. 8 years later, when I left the firm and I joined the PhD program in 2007, I had 50 people reporting to me, 1,400 restaurants like this, 1,400 restaurants. We were preparing financial statements monthly. So every week, 350 on an average financial statements came through my desk, and I would look at it, and you can imagine how long I have to look at one to identify if there is anything wrong. And that was not the only thing I was doing. I was involved in training, I was involved in other things, right? So 3 minutes was too much for me to look at and find if there is something wrong. You follow? So I would look at this thing, I will flip this 10 or 11 pages, and the thing will just jump out at me. The problem would just jump out at me. I would say, okay, ending inventory is wrong, cost of goods sold is wrong, labor cost is too low. Go and fix it, right? So it's not magic. I had looked at thousands of them by that time. You follow? So when you are looking at the first one and you're just feeling, this is just what is, right? This is normal, right? But my idea is to give you an exposure to the real thing while you're in the classroom. You follow? So this is the whole idea, and inshallah, you will be much more, once you do this, you'll be much more comfortable doing this, inshallah. Okay. So the last thing. Okay, yes, very good. I'm glad you said that. The computerized exam is scheduled for next week, but we won't be able to do it next week because of Mr. Boykin's presentation, so we'll have to shift it to the following week, right? If you don't mind. Don't mind. Is that okay? The following week, whatever the date is, instead of next week, because we won't have time. Okay, so what is your question?
I was just asking because it was going to be at the same time as the presentation. I wasn't there.
Presentation of Mr. Boykin?
Yeah.
Yeah.
I was asking, like, is it now going to be next week?
No, it can be. I mean, when I put the exam there, I did not have Mr. Boykin confirmed to come on that day. So later on, so we have to shift. We can shift our stuff, but he is already ready. He has blocked out his office hour because it's in the middle of his day. So it's at 11:30 his time. So he already canceled everything, and that is blocked. That time is blocked for us. So he will come inshallah at the same time. And what I will need for you is to bring your laptops. So next time when we do the presentation, when Steve Boykin comes, have your laptop and everybody come to Blackboard individually instead of on this speaker, right? Because the sound quality was really low because of the speaker last time. We could not hear, right? If you have, that would be much better, right? headphone speakers, and we will turn off our microphones when he's speaking. If we have a question, we will turn it on, right? And then we'll stop. And that way we can have a better recorded quality, because if you want to listen to the lecture, the presentation again later when you work on the financial statements, you can go back, right? And I will ask him, I did not ask him, if you could email him the questions, right? You can email him and carbon copy me. This will greatly enhance understanding if you can communicate with him, if he has time to do that with us. And inshallah, I don't think he will say no if I ask him. Does that answer your question? Okay. Now, did you get a chance to look at the link I sent you? Did you get a chance to look at the accounting, the paper that we have in Social Sciences Research Network on accounting in the Quran? Have you been able to look at that? Anybody? Huh? It is. I did not intend for you to read it, right? It's not. It's not something that you can read in just one day or even a week. But I just wanted to share this work with you. This is not something that you're going to be tested on, or something that you need to study for the course. But just quickly, I wanted to share this with you because we have worked on it for quite some time. And I'm just going to put up here the file and just show you a couple of things, what we did. Oh, we started working on it in 2017, I think. But we did not continuously work on it, right? We did not continuously work on it. Let me just, let me show it here. That way, if somebody wants to, who's not here, can listen to what we discussed. Just quickly, 5 minutes or so, and then I will let you go. If you get a chance, download and read it. And if you have any comments, because we would like to publish this paper at a mainstream accounting journal. So this will be published in a mainstream journal to accounting academics, and they're not all Muslims, right? So this is catered to the to all people, right? So this is supposed to, this is a 138 pages, and it's not complete yet, and it will not be published in one paper. So there is a limit. The paper is now 40,000 words, and it cannot be published in one article. There is a maximum limit of about 10,000 words for each article in most journals, right? 10,000 words is the limit. And we will break this down. So what we did briefly is we went over the verses in the Quran. We did a search for all the words that have the root word hasiba. Hasiba yahsabu, right? Hasiba yahsabu, hasinba, which is the root word of the word hisab, right? Hisab. The word hisab itself is present in the Quran. The word accounting as a profession, muhasaba, is not in the Quran. So we did a search and we found 109 words that have the root word hasinba, but 60 of them do not bear the meaning accounting or accountability. They bear a meaning something other than that. For example, hasiban nasu ayn yaqulu amanna, right? So this is not hasiban nas. This is not related to accounting. This is, do people think, right? Do people reckon? So we did not consider those words. Only those words that have the meaning, accounting, or accountability. Those are 49. 49 words. And they are found in 46 ayat of Quran. Right? These 49 words, there are 3 verses where two words come at the same time, right? Two, right? فسوف يحاسب حسابا يسيرا, right? فسوف يحاسب حسابا يسيرا, فسوف يحاسب حسابا, twice, right? Right? Also in Surah Talaq it comes حاسبناه حسابا شديدا, right? So it comes twice, 3 times, 2 times the same root word hasin ba comes. So we took those ayat and we studied them. We took those 46 ayat and we studied them to see what is common among these ayat. And we came with 8 themes where we can put these ayat. 8 themes, right? 8 different themes. And those themes are, let me show you quickly. Actually, let me go to the table, it is easier. Here. So you see, these are the 49 words that come. Hisab comes 39 times, right? Hasiban comes 4 times. Hasibin, right? It comes 2 times. The 8 themes are as follows: swift in taking the account, right? Sari'ul hisab. Sari'ul hisab, right? It comes 9 times. So swift in taking the account, right? وَهُوَ سَرِيعُ الْحِسَابِ اللَّهُ سَرِيعُ الْحِسَابِ إِنَّ اللَّهَ سَرِيعُ الْحِسَابِ. This comes 9 times. Without account, بِغَيْرِ hisab, comes 7 times. Counting is only with God, right? Only with Allah. Counting is only with Allah. This type of verses comes 10 times. For example, in Surah Ghashiyah, the last ayah is Inna ilayna iyabahum thumma inna alayna hisabahum. So Allah says that the accounting, you convey the message to Rasulullah sallallahu alaihi wasallam. Allah said, you convey the message. We will take. Allah says Allah will take, right, the account. So the 10 verses that are like that. And then self-accounting, right? Self-accounting, it comes 3 times. For example, kafa bi nafsika hisab. Kafa bi nafsika. Kafa bi nafsika. I'm forgetting this in surah. I'm forgetting the ayah. Huh? Right. The self-accounting that people will اقرأ كتابك كفى بنفسك اليوم عليك hasiba, right? So there are 3 times that it comes. Accounting of time comes 3 times. Accounting of time, for example, this accounting of time, 3 of the times it comes in relation to the sun and the moon, right? So in Surah Rahman, remind me the ayah, وَالشَّمْسُ وَالْقَمَرُ بِحُسْبَانٍ وَالشَّمْسُ وَالْقَمَرُ بِحُسْبَانٍ. So that the Shams and the Qamar is there to keep hisab. Hisab of what? Tafsir is time, right? Of time. There are 4 ayat that come like this. And then there are 3 ayat that talks about awareness. You are aware of the good hisab and you will get the good ending. And there are 5 verses that discuss heedlessness. You're not worried about the hisab, right? and then your hisab is going to be bad. And then 5 times Yawmul Hisab. Yawmul Hisab comes 5 times, right? Yawmul Hisab comes 5 times, and I think 3 of them come in Surah Sad. 3 of those come in Surah Sad. So anyhow, we went through this. Yawmul Hisab, yeah, 3 times. 3 of those comes in Surah Sad. The Yawmul Hisab in 5 times in the Quran, 3 times comes in Surah Sad. So what we did is we took those verses and we went to 4 different tafsir. Tafsir Ibn Kathir, Tafsir As-Sa'di, there is a latest one by Tafsir Khan and Al-Hilali, and then Tafsir Jalalain. Mohsin Khan is the summary of Al-Tabari, Al-Qurtubi, and Ibn Kathir. So 6 you can say tafsir, and we took the entire passage for every verse. So if we take just the verse out, it does not contain the passage. So we took each passage and we went to these 6 tafsir, and anything that we found in there where there is contemporary research about the same thing. For example, in the first where Fatiha is mentioned but Nakhla is mentioned separately. Right? Shajar al-Nakhla, the date palm is mentioned separately. The question is why? Right? So we went into contemporary research on the date palm. What is in the date fruit? Right? And we found contemporary research that date fruit, that food in the date fruit, tamar, has everything you need. You can eat just that, and if you never ate any other food, you will not have any deficiency in your body. Everything you need can be attained. I'm getting chills when I say this. I looked at the medical research and the nutritional research, several of them are put them in there, that you can just eat that. That is such a number, and you don't need anything. And where does Allah provide this for? The middle of the desert where there is no meat. You can eat just that, right? So when I found that, I just purchased boatload of days and COVID-19, no food, eat the meat. Right? So, and then, for example, Allah says in Surah, I know I'm taking longer than I said. I will let you go in Surah Qasas. Allah says that if Allah left the night to continue without ever bringing the day, right? Or if Allah let the day continue without ever bringing the night, can anyone bring the day or the night back? Right? But Allah says that from His ni'mah, Allah gives you hope. So I looked at the research of people who live in places where there is continuous day for 6 months or continuous night for 6 months. What is the situation? And there is a whole load of medical research of how their health deteriorates because of the nuclear, how they are not able to function normally because there is no night or there is no.
There are some problems where we have function so
Right. So yes, all of those research is there, and they took a sample of people who do not have nights and their health, right? And then, for example, in the Quran it says, "وَجَعَلْنَا نَوْمَكُمْ سُبَاتًا." Subatan for rest. So those people who don't do that, right? So it's research of people who work night shifts. What is the health situation, right? And then go. So with the classical tafsir, we added the contemporary research in every case that we put, right? There are others, many others, right? Biology, from psychology, from medicine, from nutrition. So we tried just 130 pages, for no reason. So we did that, and last thing, for every theme, so we have 8 themes, right? So for every theme, we did something called a concept map, and let me just show this to you outside that. And this is the last thing, inshallah, I promise you I will let you go. So theme 1, revised auto format. So we use something called the concept map to bring the theme. So there are 9 verses in this theme, which is Swift and accounting, and we divided the verses into 3 categories: akhirah, spirituality, right? You can call it iman, you can call it taqwa, and then affairs. And in each case, how the verse addresses different issues, right, in this theme, we have put it in one page. This is the concept map, right? So if you follow one, let's look at the first one, right? The first one is, as you see, swift into having mentioned the concept of spirituality, including number 1, supplication. So this is verse number 199, 200 of Surah Al-Baqarah, right? فَمِنَ النَّاسِ مَن يَقُولُ آمَنَّا فَمِنَ النَّاسِ مَن يَقُولُ رَبَّنَا آتِنَا فِي الدُّنْيَا وَمَا لَهُ فِي الْآخِرَةِ مِنْ خَلَاقٍ وَمِنْهُم مَن يَقُولُ رَبَّنَا آتِنَا فِي الدُّنْيَا حَسَنَةً وَفِي الْآخِرَةِ حَسَنَةً وَقِنَا عَذَابَ النَّارِ ذَلِكَ لَهُمْ نَصِيبٌ مِّمَّا كَسَبُوا وَاللَّهُ سَرِيعُ الْحِسَابِ. So this, if we say, this is in the context of this spirituality, supplication 1, right? For the worldly affair and the hereafter, this will result in goodness. If you just go for the worldly affair, then it will result in no share in the hereafter, right? Right? So again, each verse is put in a concept map that where does it go, where does it flow, right? For each theme, we have 8 themes, and each theme, I told you, 8, 9, 4, 5, 3, and so forth. So this we have added there to look at the summary. And this is work in progress. So this is just to try to get you interested in reading it a little bit. If you can download whenever you have time. If you don't have to do this before the semester ends, right? But if you can download it and have it in your device, or if you want to print out, give me your feedback if you see that something would maybe improve this, inshallah, further, right? There is no end to improvement. There is room for improvement until we get published. So please give me your opinion, right? You can email it to me anytime beyond the semester, and we plan, inshallah, we plan to publish at least 4 or 5 papers. The longer themes we will publish in one paper separately, and the shorter ones we may combine, right? All right. Thank you so much.